Hello and welcome to today's NHIC RMI Strategic Forum webinar recording. Today you're going to hear about the proposed digital strategy for the RMI workstream, which will be presented later today as well at the RMI workstream for the CLC. And also we'll be hearing from NHIC member Kieran Harkin from QASSS, who's going to be talking about Dispute Assist, which is an alternative dispute resolution product for the sector. So we hope you enjoy today's recording, and as always, please do get in touch with us at hello@nhic.org.uk if you have any questions. So welcome to this presentation that's just going to give a lead into the main presentation of the day, looking at the alternative dispute resolution product. And I just wanted to cover off with you the outcomes of the last two strategic forum meetings, as well as other digital meetings that we've had on behalf of the CLC RMI workstream, looking at the digital prospectus. And if you recall, we were asked three simple questions. Firstly, where are we today? And three simple questions, but they were quite complex answers. But if we look over on the right-hand side, we can see that from a regulatory and compliance perspective, we are a very broad sector within domestic RMI, which tends to struggle to stay up to date. The regulatory demand to access funding often favour larger companies that have large training and HR departments, and there can be a confusion between the different government departments that is particularly keenly felt within domestic RMI. Looking at the skills and training aspect, within the small RMI organisations, there is a lack of time to upskill and for training. The majority are self-employed who have naturally fewer resources to invest in training. But however, some positive news is that RMI does tend to be better skilled than other parts of the construction industry with a level 3 NVQ or above. And both of those bits of data on skills and training are from the CITB, and you can see those resource links in the footer. There's a Herculean task ahead for domestic RMI. To achieve net zero carbon by 2050, the UK must refurbish its 27+ million homes in 30 years, which works out at just under 1 million a year and 75,000 each month. And that's assuming, which we know we didn't, that we started in January 2020. And that's not just somebody getting their bathroom refitted or decorated. That is refurbishing to zero carbon. So it's a Herculean task ahead. And what we're going to hear more about later on today is the fact that the sector is ripe for disruption. So homes in the UK and Ireland are worth over 8 trillion. 30% are owned outright, 40% mortgaged, 18% social rented and 12% private rented. And there are 4.5 billion unresolved complaints. And it's a complex and confusing market. So therefore, it is ripe for disruption, and digital technologies have an opportunity to do that and to support that disruption. Where we want to go, well, looking at regulation, we want to have connected strategies and incentives across government to align to. And we want those to align to the regulatory framework. And we want to be able to understand consumer behaviour and have regs that support that behaviour. This links back to consumer protection, consumer purchasing rights. All of that needs to link back to more of a trend towards online purchasing. We're looking for solutions that work across the whole supply chain and don't add any unnecessary confusion and delay. And this is again something that's going to be talked about at this afternoon's RMI workstream around the potential rollout of CSCS cards into the domestic RMI sector. And we want a smarter industry with less room for rogues and app-driven to support mobile working. We want to have an industry that is able to connect digitally with consumers more easily to help with payments, debt collection, contracts, etc., etc. On the skills and training side, the self-employed are often very reliant on employing already skilled workers. So there's opportunities to improve and incentivise an apprenticeship programme to make the sector more attractive for people coming in. And we want to have supported and delivered training through online and digital solutions. And it would be fantastic if we had a centralised and funded available data around a competent persons list. So digital adoption should be at the heart of the national refurbishment strategy. Also at the heart of product manufacture, delivery, monitoring, evidence, consumer protection, disputes, financing. And we should have a sector that supports and works alongside the connected home. So how are we going to get there? Again, starting in the top right-hand side, we need active collaboration across government and industry, connecting things together such as consumer protection, online selling and buying law, cancellation rights and financing. And there needs to be a sector-specific code of conduct and ethics around data. And that's a really easy bullet point, which actually has a huge amount needs a huge amount of rigor to be behind it. We need to use technologies to support and improve skills, record keeping and customer insight, how people are using the technologies in their home, and also to start connecting into the maintenance aspect of RMI to support a maintained home. And we can do that through things like the Internet of Things and smart and connected homes. We need to use that as well to help reduce carbon in all its forms, and also to connect with utilities and automotive to ensure future strategies around electric vehicles and offshore wind generation, etc., are deliverable and connected to the home. So the only way we're going to get there is through active collaboration across all parts of the sector, and using the carbon agenda as a driver for enabling digital transformation, I think is a key way to make progress. And we need sector-wide adoption of digitalised data systems such as eTIM and BIM. And so finally connecting into the disruption aspect, is that we need to work with potential disruptors to support millions working in the sector to understand the change and understand and adopt new ways of delivering products and services, such as things like subscription models. So leaving that there, I want to come on to our next speaker, Kieran Harkin from QASSS, who's going to talk with us about alternative dispute resolution. And he'll just be sharing his screen with you now. Okay. Over to you, Kieran.
That's great. Can I just check, Anna, can you see that screen?
Yes, we can. Thank you.
Excellent. Okay. So first of all, good morning, everyone, and thank you for the opportunity to present. And I hope what my plan is, I'm going to tell you a bit of a story through this. And it's about that really glamorous subject that is dispute resolution. So I'm going to do my best to try and make it interesting. But to kick things off, what I wanted to do was actually give you a very brief history on ADR, very brief. I suppose the first thing to say is dispute resolution, because not everybody does know it, is it's the element of resolution that kicks in after a complaint has reached the state of deadlock. And it was a service that firstly came about back when Maggie was in charge back in 1987, and it came in via the Legal Services Authorities Act, and it was supposed to be an alternative to the official judicial process. It was launched by legal firms, so it was interesting that it quickly adopted a nickname as an alarming drop in revenue, when obviously you're comparing it to its more prosperous, well-known sort of cousin in terms of suing somebody. And then in 2015, whilst some of you might remember, Jezza was knocking out a BBC producer, what was actually happening is in the ADR world, there was a real shake-up going on. So the ADR regulations were being released, and really it put an information requirement on businesses who were selling to consumers. That was the big thing for it, around signposting consumers to ADR providers. And then in 2016, actually traders in the UK who were selling online had to provide a link to the online dispute resolution platform some of you may be aware of. And little did we realize in 2016 that 4 years later, the UK would actually be coming back off that, courtesy of good old Brexit. And then the last bit of the brief history that I just wanted to show you was in 2018, BEIS released an eagerly awaited report called Resolving Consumer Disputes, which was to highlight how ADR was performing in comparison to litigation. And that is where my story begins. I want to just quickly talk about that report and what did that report say? So what the report actually said was that out of all those consumers surveyed, only 16% actually were aware of what dispute resolution was. Bearing in mind, this has been around since 1987, only 16%. Lower again in the energy market, it was actually only 14%. The report also said that almost half of those consumers who had actually used ADR had experienced the problem through the process. And what was really interesting was, and why you would expect those two numbers to be much higher, was also within the report was the ultimate catalyst for ADR. And that was the average time for a claim to go through the courts was taking 371 days. You would have thought that would have been the ultimate deterrent from having to actually use litigation, and you would use ADR, but somehow those numbers weren't rising. So the question for us at QASSS was, well, why isn't ADR being used more? And I think we've managed to break that down into 4 areas through our research. One of them is consumer and business awareness, as the previous slides just sort of highlighted. One is around dispute resolution times themselves. You know, it is supposed to be the faster alternative, so is it all the time? The other thing is then around the burden of cost. It is a cheaper alternative to litigation, but there is still a cost that sits there associated with it. And then the fourth thing is something that links back to the previous session, which is around digital redirection, where ADR is not even making it onto the plate as an option for consumers at times, which we'll talk about in due course. So just taking those one at a time very quickly. In terms of the awareness, 16% were aware, and this was despite 3 years prior, you know, in 2015, the ADR regulations put in place a need for traders selling to consumers, whether they were going to use ADR or not, they needed to give consumers the details of a certified ADR provider and inform the consumer about whether or not they were actually going to use the services provided by that ADR provider. So what this tells us is that normally through legislation, we can see things being adopted. But what we've seen here, and we'll know ourselves, if you take this back to our own sectors and think about all the traders that we have a relationship with, do we believe that every one of them are actually performing what was required of this piece of legislation? And I think the true answer in that is probably no. So the way this works is obviously in a non-regulated sector, like a lot of the home improvement sector obviously is, the delegated authority from BEIS goes to the Chartered Trading Standards Institute for this, but this is a very difficult thing to police and monitor. So we've got to find new ways of actually inspiring people to really use ADR. In terms of the resolution times, well, actually what was supposed to be the faster alternative at times can take up to 3 years. And you see this in the ombudsman landscape. And the reason for that being is that there is actually a principle to it. You take a lot of cases that are very generic in nature, but quite similar, and you stockpile them. And then you make an overarching decision for all of those cases, which then should allow a surge in resolution to come out. But that's not okay if it's going to take potentially 3 years to make that decision. So that's a real problem. But even if you take that example and exclude that for a second, you know, we're working in an industry where dispute resolution, the general industry benchmark is seen to be around 80 days. But 80 days in today's world is just not acceptable. You know, speed is a human metric now. We expect everything much faster. And with each day that goes by, you know, the emotional stress can go up for both parties, business and consumer. But the negative impact on a cash flow for a business where potentially a consumer is unjustly holding on to cash can have a real problem. The number on the left on this screen is 2 days. This is what QASSS we're getting to in terms of dispute resolution time. But even 2 days, we would question to say whether or not that is fast enough in today's world. And actually, should those days actually become ours? So resolution time, we can see, is definitely a deterrent to ADR when you start to see some of the data that comes through. In terms of the burden of cost, coming back in the history, in case you didn't know this, those ADR regulations effectively said, you know, the ideal scenario is dispute resolution is free for consumers, and it normally is if they're working with a retailer that's part of a scheme. But in those occasions when consumers are purchasing dispute resolution themselves, the regulations would say that that should really be a nominal amount. Now, what is a nominal amount? Good question. CTSI did engage with a barrister who gave an opinion, and that opinion, lots of words. I think generally what came out of that, somewhere in the region of £35 was about appropriate. I think what we can see online is when a consumer is paying for it, it's normally about £100 plus VAT. There still could be the extra costs of inspections, etc., still associated with that. But it doesn't necessarily matter as much, because really the burden of cost truly sits with the business. And that is potentially a problem for businesses, particularly in a pandemic year, where everything's tight and actually they start to feel the squeeze and all of these things. And particularly those businesses who probably feel and have the data to show that actually when they do find themselves in dispute, they quite often come out favourable. So actually when the whole burden of cost sits on them, how do we expect those businesses to get behind what the regulations said in 2015 and actively signpost all of these services when really they don't really feel like, you know, they're being treated particularly well by this sort of burden of cost being placed on them? So that was the third issue. And then the fourth is something, and this is the bit that links back before, is around digital redirection. And I suppose in today's world, so there was an interesting report that came out, surveyed lots and lots of consumers, and 64% of consumers dreaded making a complaint to the company that they've purchased something from. This, whether it's millennials or whatever it is, we have this problem now of actually speaking to somebody directly, picking up that phone and making a complaint. They would much rather either go via an independent third party, or they would much rather hit one of these two things, which is Google and Bing. And if we take, for an example, within the sector, I don't know, let's say a conservatory, and say they've got a problem. Well, now what the sort of general audience does is they take to one of these search engines and they go, I'm not happy with my conservatory, or I'd like to escalate my complaint about my conservatory, or words similar to that nature. And I would welcome everybody, try this for your own sectors and when you see what happens. So when you do that, and when a consumer does that, the first thing that they face is what we call now the Google ads. And that top one was probably one of my favorite that obviously came out this year. It was just so blatant. But actually they're met with 2 or 3 Google ads normally, first of all. And these are from companies that do not want you to make a complaint. They don't want you to claim against your insurance-backed guarantee. None of that is in their interests. They want you to sue the lender if you've purchased on finance, or sue the company directly if you haven't purchased on finance. That's what you're met with first. If you do make it past the Google ads, then you're into the consumer champion territory. And this is what we call the organic searches on Google. And you're only with Mr. ITV there, Martin Lewis on the left, where you've got the Citizens Advice Bureau and which, and all of which are saying that if you've bought on finance, you need to claim against the lender, which is correct. They are able to, under the Consumer Rights Act, they are absolutely able to do that. Section 75 is under workmanship, Section 56 is for mis-selling. The problem with this is that every time those claims go in, of course, they find their way back to the bank. Now, the bank is taking all of these claims in on behalf of their retailers. And what they're actually doing then is the cost for the finance facility for those retailers, well, actually, they're counting up all of these claims, and the cost of those claims get built into the costing mechanism for the finance facility for the retailers. So what's potentially actually happening is Joe Blogg's consumer out there is taking Martin Lewis's advice and suing the bank for £2,000. The bank's adding up all those £2,000. That's being built into the finance facility. There's us then coming around next to get a new conservatory, and we want to get some finance. We might see a 0% finance rate for the first 12 months, for example, but actually the business has had to pay extra for that 0% finance facility, and that extra is being added on to the cost of that contract. So it's a bit of a vicious cycle this here, where what looks like absolutely the right advice for consumers, this is where you go when you're in detriment. Well, actually, it could be causing a little bit of a vicious circle later down the line. So it's just something that's quite interesting, worth thinking about. If you do make it past the consumer rights, and you probably noticed I've not even mentioned dispute resolution yet. If you do make it past all of these groups, you might just find these guys. These are the ones that normally would appear on the front page, the sort of first rankings on Google. Obviously very helpful if you've bought on finance. They really are looking at that, though, from a point of view as within the relationship between the bank and the consumer. And actually, that claim will probably make it, guess what, back to the bank again. All the bank's trying to do in these circumstances is actually lend us some money to buy something. But actually, other than the Financial Ombudsman Service, you won't normally see too many others feature on that first page all the time. And the Financial Ombudsman Service, obviously, because of the sheer size of it, when I was talking about those resolution times, well, as long as you don't mind the wait, then actually this could be okay for you. So I think when you take all of that, you know, and hopefully that's enough to let people realize, oh yeah, I can see those 4 barriers now quite clearly. At QASSS, we were sitting thinking, going, right, what exactly is happening here? Because we were in a place whereby we were having the fastest resolution times in the sector. We had a really good in-house success rate in terms of resolving disputes, but we couldn't attract any more take-up ourselves. And then from a costing perspective, if you think this was initially launched by legal firms, so it was time-based charging, it was an hourly rate, then we got the day rates, then we moved to per case rates, which are hard to budget for because you don't quite know how many disputes you're going to have in a year. So we actually thought we were being really smart and we were going with subscription models, make it easier to budget. But it wasn't until the pandemic that a major client gave us a bit of a slap in the face and said, how can you continue to put the burden of cost? Consumers need this, businesses also need this, but how can you continue to put the burden of cost on the business? Every business that normally uses dispute resolution knows that they need it, but it's actually the cost barrier is stopping them from doing it. So you need to rethink your whole strategy. Hence, Dispute Assist was born. And our mission under Dispute Assist is effectively to bring fast and fair dispute resolution for everyone within the home improvement and the renewable energy markets. That's the area we know, that's where we have our expertise, and that's where we want to stick to. So it's a fairly simple mission, but how do you do it? And I think how you do it is you start at the front and you work your way backwards. So if you take the right-hand column on this, litigation. So normally when you find yourself in that world, you get your day in court, we would always say nobody ever truly wins. You never quite always get your costs back. You get an awful lot of distress potentially going through the whole process. And ultimately, at the end of the day, you could end up spending more money than you really wanted to. In the middle column was us, QASSS. We were part of that. We were at the subscription fee row. And one of the issues that we could see there was, you know, and I haven't included all the fees on this, you know, setup fees, admin fees, membership fees, et cetera, et cetera, et cetera. All of that is off-putting to businesses to go, yeah, I'll sign up to that and I'll recommend that. It puts them off. So what we were trying to work out was how do you find a way where there's no setup fees, there's nothing up front, and then all the costs that might come up through dispute resolution are somehow included in a nominal fee per contract. How the heck do you do that? And more importantly then, how much does it cost? And in terms of how much it costs, it depends. So it could be, say, £2 per contract, but it'll never be more than £15 per contract. And the reason we've been able to do that is we've got a calculator that we've used our legacy data on, and we've built this calculator that basically then takes minimal information from a company and it can generate a price for that company, how much it could be per contract to have a full end-to-end dispute resolution facility in place. And I do mean things from the mediation to the conciliation, to independent inspections, to expert witness reports, which can cost £1,000 to go, to potentially adjudication with an ombudsman, all included potentially in that £2 per contract. And remember, I'm still talking about a conservatory at this stage. So if you think about that for a second, a £15,000 conservatory, a lot of consumers pay more than £2 or even £15 to protect their bubble, their iPhones, the new Dyson Hoover, the dishwasher, whatever it may be. This is a one-off nominal fee that puts in place a facility like this, which can take on average single days to resolve something. And that's quite exciting. So the calculator that we're talking about here is something that will go online in 2021, and it will actually allow businesses to put their own numbers in and then for them to create their own pricing. And the beauty of this calculator, which is the bit that I'm probably most excited and proud of, is the fact that the lower disputes a company has, the less it costs. But even better is, say after 12 months, they've improved their performance, they've reduced the number of disputes that they had, cost comes down. So how many suppliers out there are saying to you after 12 months, we're going to reduce our costs? Not very many. And that's the beauty about this, because it's rewarding then great customer service in effect. So in terms of then how it works, in terms of the logistics, if you like, so a consumer, let's keep the conservatory thing. Well, I should probably have a glazing icon on there now that I'm looking at it, but let's say a consumer buys a conservatory for £15,000. And within that £15,000, there's £5 set aside for dispute assist, okay? Now, the beauty about this, what I love is it takes away this problem. Who pays for it? Is it the business? Where is the burden of cost sitting? Is it the consumer? Is it the business? Because it's such a small amount, it's such a nominal fee, it doesn't really matter. You know, if you think about what they're probably building into the conservative pricing because of that finance facility already, I'm telling you that that will far exceed this £5. So actually, it's such a, well, it's the price of a pint these days in some parts of England. That's now included, and both parties get access to that dispute resolution facility. There are no extra costs. The inspections are included. It's all worked out in the calculator. The expert eyewitness reports are included. Escalation to an ombudsman for an adjudication, all included. So once the purchase is made, then the retailer or contractor, whatever your terminology, sends that data to Dispute Assist. And really what we're getting there is just the initial contact details for the consumers, plus some basic information about what it was that they've purchased, what's the product, what was the contract value, have they paid a deposit, etc. Now, if you think back to that digital redirection, this is where the important part really kicks in for Dispute Assist. So straight away, we're contacting that consumer. We're making sure that we're saying, congratulations, well done on making your purchase. We hope that you never need us, but we are here if you do. Here's the email, here's a telephone number, here's what we do, in an effort to make sure that people don't feel lost, that they have to take to Google or Bing to find out where they go next. They remember the brand that is a Dispute Assist and they go, I know who to call, I've got a problem. And we can help them hopefully then resolve any issues before they need to go into that big claim market that sits there online. So then let's say a dispute does arise. Actually, traders have up to 56 days basically to decide whether or not they're going to resolve a complaint or whether or not they're going to issue something called normally a letter of deadlock to say, we're done here, we've no more to talk about, we don't agree. We would generally say to businesses less than up to 28 days, anything after 4 weeks, you're starting to flog a dead horse. This is the relationship's just going to continue to break down. In fact, we'd even say as early as possible, if you can see that you're opposite ends of a spectrum, consumer and business, why move it on to a dispute resolution stage and let an independent party then kick in and then hopefully resolve it. So what will then happen, it goes into our first stage of dispute resolution. That's normally up until 7 days. And that allows us to rather informally start to mediate between a consumer and a business. The big change for this year is we've started to introduce live interview technology for obvious reasons with the pandemic. And this is all part of the complaint and resolution side of our industry now going digital. But what this really allows us to do then is to look into the consumer's home there and then see what they see the problems. We fancy things like take measurements on screens and everything else. But we can also dial in manufacturers or dial in inspection companies to there and then start to look at the problem. And that allows us to resolve things in those 2 days that we were just talking about. An interesting point here, just for people's information, is in the dispute resolution world, when it comes to fairness, we measure quite a few things, but one is how many disputes end up sort of in favor of the company, how many in favor of the consumer, and then is there a compromise somewhere in the middle? What's interesting about this technology, what we've seen in the insurance world, and we're going to start to see it in the dispute resolution world, is in the insurance world, using this kind of technology, 40% of claimants walk away. It's amazing when you ask somebody there and then before they've got their story straight to put their eyes on the problem, how many of them then say, oh, my phone doesn't work, or the Zoom doesn't work, or whatever. All of a sudden, these problems seem to go away. So actually what a lot of that data in terms of the balance of favor, what it's not capturing is potentially a 40% that never made it into the stats in the first place. So it's very interesting technology and something I would invite everybody to explore for their own sectors. The second stage then, after the first 7 days, we move into the more formal stage there, I say, where we really start to move into a conciliation phase. And we formally invite both parties to send in their evidence, and then we'll work on that. And thankfully, we don't get to that stage too often. We normally operate in the first stage. Between these two stages, we resolve at this moment in time 99.2% of all of our disputes in-house. The final 0.8% will then escalate to the ombudsman, who that we have a relationship for adjudication. The other thing that Dispute Assist now does is if you get to a settlement and that involves any form of repair work or replacement work or taking something out, etc., sometimes the relationship's completely broken down between the consumer and the business. And if that's the case, the last thing anybody wants is to go out there to that home, So what we can do is we've got an independent contractor network who can go out and put things right, which then stops any further conflict between the two parties. But also in today's world, as we're probably finding out as well, it stops the business having to try and crowbar out a fitting team to go and put something right. They can continue doing what they're doing, allows the business to keep focusing on hopefully new business or current business. And then we're still putting things right with the consumer without them having to worry about letting the retailer in that they've maybe fallen out with. And then the final part of this is around the insight, and this is absolutely gold, this stuff. So a classic example of this will be renewable energy. So even our own internal teams, when I ask the question, what's the biggest cause of dispute in renewable energy? Normal answers are mis-selling and the workmanship. But actually, when you look at the data and you get in amongst it, actually one of the biggest causes of disputes in that world is failed appointments, believe it or not. Now, I'll not go into the details as to why, but it actually makes sense when you hear more and more about the information, why that might happen. But the beauty about that then is that's information now you can start to, it creates questions, doesn't it? So you can start to ask renewable energy contractors, how do you manage appointments? And the result will be, post-it notes, Excel spreadsheets, CRMs, you get the whole vast array of different things. But that's what the sort of the resolution landscape should be doing. We should be using that insight and then pushing that information out to the different sectors and saying, have you thought about this or try this, etc. And that in turn should bring down disputes. In terms of that contractor network that I talked about, we've got a nationwide contractor network that it's our belief now is the largest remedial glazing contractor network in the UK. The reason why I'm saying this, and the guys in the glazing network will understand what I mean by this. So obviously the insurance world already has access to these vast networks of contractors who go out and put things right as a result of claims. We've also tapped into those networks. So now we've actually got capacity for around about 100,000 appointments a year if needed to go out and put things right as a result of a dispute or a claim, etc. Because we've been in the renewable energy space for the last sort of 5 years or so, we think we've actually now got the largest remedial network in renewable energy too. The last thing I want to talk about there was just quickly the schedule of rates. So again, in the insurance world, when it comes to schedule of rates, we've put in place pricing that basically it's a menu pricing. If things go wrong, that's how much it's going to cost to put something right. So we've already got that in place, and we're now going to introduce that to renewable energy. We're on version 3, I think, at the moment, but that will be the first schedule of rates for the UK when it comes to renewable energy. So just finishing off then, so does dispute assist work? Well, obviously I'm on here talking about it in its very early stages. I think the only way to measure that is to take it back to those 4 barriers that I talked about. And I think the early signs are good. So in terms of consumer and business awareness, the model is being adopted hopefully by the kitchen, bathroom, bedroom market. And that's via a partnership with, some of you may actually know, which is the British Institute of Kitchens, Bathroom, Bedroom Installation. And their online platform is called Protect My Install, which is effectively a platform that consumers can use to get leads and make a purchase in that sector. And it has things like an escrow account and so on in place to protect the consumer. Dispute Assist is built into every one of those transactions that go through that platform. So that's fantastic for us. And Bigby have actually sent out communications on Dispute Assist to all of their membership both Wednesday and Friday of last week. The model itself, unsurprisingly, is supported by Barclays for large retailers. If you think about that slide with Martin Lewis and everything else, the banks do not want the hassle of claims coming into their buildings. They are happy to drop the costs of their finance facilities. Those claims cost them so much in terms of overheads. In fact, it's causing some banks to withdraw from certain markets. So what's great about this is, if you think about the 16% again, and how we were trying to drive up awareness of ADR through legislation, what we've managed to do here now is you take a sector as big as the KBB market, you get a large influence within that sector, you've got a bank with all of the retailers. What that effectively means then is every one of those consumers associated with those organizations will get a phone call or that email from Dispute Assist to say, this is what dispute resolution is. Before you go anywhere else, give us a go first. That's how we believe you increase the profile of dispute resolution and make everybody aware of it. Obviously, in terms of improving the awareness, you need to have the dispute resolution times. We've obviously been achieving some records ourselves. The proud point as well, and why there's a place for both the ADR provider and Dispute Assist and the Ombudsman, is because of that sort of 2-step process, we've had 0 escalations actually progress to court in the last 2 years. which is one of our big goals, is to avoid litigation altogether. And the bit about multi-award win wasn't necessarily, look at us, we won awards. It's about the fact that we went down to London. We were on the UK Complaint Handling Awards. So this is complaint handling. The number of people who did not even know at these awards what dispute resolution was amazing. So again, we were trying to boost the profile of dispute resolution in that world too. And then in terms of the burden of cost, well, is it a nominal cost for consumers? Absolutely. You can get this down to single figures in terms of pounds, even as low as potentially £2, £4, whatever it may be. Is that a nominal cost for consumers? Absolutely. If it is built into a contract, some businesses might just absorb it completely because it's so low. Is it a nominal cost for businesses? Absolutely. Is it cash flow neutral? Absolutely. If it's built into the contract or it's added on, but more importantly, their overheads can also reduce. You think now all of a sudden, hang on, all these complaints that we were trying to deal with, they're becoming complex complaints. Now we've got a facility to move it into. So what does that allow us to now spend our time on now? Can we repurpose staff to more positive things now going forwards? And actually the costs associated with our finance facilities, can we now reduce that? And actually, have we got a whole dedicated cost line to an ombudsman? Can we take that out? Because QA/SSS or dispute assist is actually going to pay for the escalation to an ombudsman if it needs to. And then obviously they're being incentivized to improve each year because actually the cost of dispute assist per contract reduces. And then the final bit around digital redirection, well, dispute assist is obviously going to try and put up that digital wall's not the right word because you still want to give consumers choices to what they want to do, but hopefully you get the spirit of what we mean here. It's trying to take out the claim volume that's now happening online. You can ask any bank that is out there, the PPI style claims are everywhere. So our goal here is to try and take some of that out and give businesses a chance to actually resolve some of these things early on themselves without it having to come via a solicitor's firm. So in terms of the Ask NHIC, the support that we're looking from the NHIC is, well, it's these questions. So I've just basically tried to tell a story from where ADR came from to why it potentially hasn't necessarily worked, how it hasn't worked for us either, and how we've had to try and change it. The question I would have for people in the NHIC would be, does this story resonate with you? Are you looking around your sector and going, dispute resolution isn't really that prevalent? And if so, that's great. I would love to hear from you. The other thing then is, does your sector, could it support a mission like Dispute Assist in terms of bringing the profile up of dispute resolution? Could your sector support it? Not all sectors might work for this. All right, I don't mind that. There will be some that won't, but there will definitely be some out there that we haven't just got to yet. We've got some calls coming up with the glazing sector, and we think is obviously talking about a conservatory, so we think it could work there. But if there's any others, we'd be very interested to hear. And in terms of any specific feedback, we're always learning. This was all born from a client giving us, roughing us up a bit, saying you need to rethink things. So we're always happy to take the feedback, particularly from other sectors as well, to understand, will this actually work in your sector, or are there certain tweaks we could make to make it work for your sector? And I think my ask probably, Anna, would be, we don't necessarily need to do this now because I've obviously taken up enough time, but certainly if everybody's willing for me to be able to just email and say, listen, could we have 30 minutes, talk about your sector, because of lots of different questions, and just explore to see how good is dispute resolution within your sector, and could this model actually work? So that's it for me. Thank you very much for listening. I hope I haven't bored you all with dispute resolution. I'm going to hand back to Anna.
Thank you so much, Kieran. You haven't bored us at all. It was fascinating, and it has opened my eyes to a really, really important issue. And I think also when we talked right at the beginning about the potential for digital disruption and other industries that are starting to look at the home improvement sector as an attractive industry, and you think of returns and how you deal with disputes and problems in other areas of your life, and although they're smaller purchases, if you want to send anything back on Amazon, you just say you're sending it back and they give you a little code for the box and it's all done, and it's all just handled. You don't even have to prove that something was right. So it's just dealt with. And I think people have that as a benchmark, and even though it's a completely different purchase, something as large as a conservatory or a bathroom or new windows, again, their benchmark of how they get their disputes resolved with big players is setting challenges for us as a sector. And I think there's huge opportunities around data analysis to provide insights and improvements into the sector and help bring those costs down. So thank you very much, Kieran. I'm going to stop the recording, and then we can come on to some questions and comments from other members. Thank you.
Thank you.